Well, I certainly think that it's accelerating the fact that the U.S. exceptionalism has been losing its shine, so to speak. And U.S. exceptionalism over the past couple of years has been a reference to how far U.S. financial markets have gone versus their foreign counterparts. And so that's easy to point a finger at the gains in S&P 500 versus Euro stocks and other areas and say, okay, that's U.S. exceptionalism. Now, U.S. exceptionalism was built on more than just the performance of financial markets. It's better birth rates than our G7 partners. It's higher productivity. It's a more flexible labor market. And those things I don't think have changed. But in terms of the rebalancing that President Trump wants to do with global trade means a rebalancing of global flows. And I think that's an unintended consequence of his policies. You're going to have to see capital outflows, and that's a negative for U.S. financial markets.
We saw a huge sell-off yesterday. My question is whether this is likely to continue. Is there further pressure for U.S. equities going forward then?
So I think there will be. I think normally when there are policy changes, it takes a few days for the market to adjust to understand exactly what this means. But we don't know what this means. We don't know what this means fully until we see what are the retaliation measures, how much do we work with other countries in order to try to bring those tariff rates down, when do they actually hit company earnings, and how are companies guiding around that. So my hope is that companies really take this on board, give some pretty dour forward guidance, and we take our lumps up front so that then we can sort of have a clearing effect on the market and maybe start to grow again in the second half of the year. So I don't think we can point to today's levels and say that is the bottom.
We have witnessed a lot of momentum for European equities this year. It's a huge contrast to what has been happening for U.S. markets. However, today, European stocks are in the red as we speak. So is the outperformance for European equities also coming to an end?
No, I think European equities, I would be more bullish on Europe over sort of a 1-2 year time frame. I'm not bullish on Europe in the long run. I still think that there's a big issue with, again, productivity, lower birth rates, all of those fundamental drivers of potential growth in the economy. But I sit on the Global Investment Committee for Morgan Stanley, and we have reduced our weight for U.S. relative to Europe.
Is there any place at this stage where investors can actually seek protection from all of this uncertainty?
Well, I think you want to think about, what could be sort of, I don't want to use the word immune, but resilient in the face of this trade uncertainty. And so I would point investors to healthcare, specifically biotech, software. This goes toward and defense, so sort of that global defense incorporating AI and tech for the new arms race. Is what we called it in research in January. Things like real assets, so real estate, and financials, even though I know European financials are down quite a bit today. So I think there are areas that investors can go to protect against this, and we have to keep reminding folks on our wealth and asset management side of the business that we're longer-term investors, so longer horizon, and we have to look through this. But that's easier said than done when things are in such turmoil.
So even for the long-term investor, the uncertainty on the table is very concerning at this stage.
Very concerning.
And challenging as a
being
result.
Kept very busy while we're in this gorgeous setting in Lake Como, it means that I've got to be on the phone a lot today.